Hello and welcome to our podcast, Creating a Smart Digital ID Process for Your Business and Your Clients, hosted by American Banker and sponsored by Onfido. I'm Jennifer Liptow with the Arizent and American Banker research team, and today I'll be speaking with Geoff Quintiere, Director of Strategic Partnerships and Alliances at Onfido. So let me set the stage for our discussion with some information about the research we conducted and a few of the high-level takeaways. In April of this year, we at Arizent and American Banker worked with Onfido to survey 200 management-level bank professionals about their digital security and fraud prevention practices with a focus on customer identity verification. Here are a few things they told us. 45% see an increase in identity fraud as the biggest organizational risk from ineffective digital customer ID. 82% rate facial biometrics as effective in verifying IDs. While 55% strongly agree that the use of facial biometrics provides a competitive advantage, there is concern that some consumers won't accept or are uncomfortable with the technology. And 92% describe improved user experience or user interface for customers as important when deciding to purchase or upgrade verification technology. So that's a lot of stats. So to help us make sense of these findings and to dig into what these professionals had to say, I'd like to welcome Geoff to the podcast. Welcome, Geoff, and thanks for joining us.
Thank you very much, Jennifer, and looking forward to the conversation today.
So, Geoff, I'd first like to start with a check-in on where we are today when it comes to digital ID verification and what you and Onfido are seeing in the marketplace. Can you talk to us a little bit about that?
Sure. Look, I think it's not an aha to say that digital transformation was well underway pre-pandemic, but once the pandemic hit, it had a significant impact on banks in the fact that they doubled down or accelerated their efforts as more consumers adapted to digital interactions. Unfortunately, at the same time, fraudsters seized the opportunity as well. And what we saw through the research was that bank fraud attempts rose 159% in the first quarter of 2021 over the previous quarter. So the so what of that is that the bar has now been raised for banks on both sides of the spectrum. On the one hand, they're trying to thwart an operation that a fraud operation that runs on a 24/7 basis now. And on the other hand, they're trying to address rising consumer expectations, whereby consumers are expecting an experience more akin to what a big tech company would provide. To put this in context around how important ID management solutions are for banks, according to Accenture, banks spend greater than $1 billion a year on ID management solutions. So it shows the pivotal role that consumer trust plays within a bank's thinking and their strategy. And we can talk about the effectiveness of those efforts and that capital deployment in a minute. But the takeaway really is that digital identity verification is now a necessity versus a preference. You mentioned, Jennifer, that in combination with your firm and American Banker, we surveyed 200 management level bankers to understand their preparedness to take advantage of the digital shift. And I think there were some very interesting findings. While 90% thought that they were well prepared to take advantage of the shift, less than 50% were confident as to the effectiveness of their efforts. And that really complicates matters. So in our view, banks really need to take advantage of the situation by crafting strategies that balance operational efficiency, customer growth, and security and fraud. Just to segue quickly in terms of where we're seeing the market heading versus where we are today, in our view, banks need to view digital identity verification in terms of a multitude of different factors, whether those factors are linked to an individual or an entity, and how the ID is constructed and the use of that identity has to be contextual. So what does this mean? In simple terms, what we're seeing in the marketplace are banks are looking to partner with third-party specialists that have integrated identity platforms across the user lifecycle. So not only combining the identity proofing, but also looking at databases, digital signals, and biometrics, which enable them to build smarter workflows, optimize performance, and detect emerging fraud, all with the lens to help them make better decisions across transactions types. I think in summary on this section, you'll hear a lot the term orchestration. which is simply the automation of data workflow management. I think a key stat to leave you with is, according to Gartner, by 2023, they predict that 75% of organizations will be using a single vendor with orchestration capabilities, which is an increase from less than 15% today. And so I think that's a pretty astounding statistic in terms of where the market is heading.
Wow, Geoff, thanks. That's a lot of great insight for us. So now I want to dive a bit deeper into the technology that's making the previously difficult or impossible possible. Let's talk about biometrics, machine learning, and AI, and what banks should be thinking about now as they upgrade or enhance, or even just make better use of what they already had. I know you'll have some thoughts on this.
Yeah, sure. I mean, I think it's important to look at AI in the context of banking in general, and then we'll, answer the question in terms of, why AI and machine learning is helping banks do what they do today as it relates to biometrics. As we all know, right, AI technologies are increasingly integral to the world that we live in, and banks are no different. They need to deploy these technologies at scale to remain relevant. What we're seeing in the marketplace, though, is there are still some banks that struggle to move from the experimentation phase to scaling the AI technologies across the organization. There's a lot of different reasons for this. It could be a lack of strategy. It could be that the data assets are fragmented and so forth. But certainly to compete successfully in the new digital environment, banks need to be data-led, AI-first institutions. Now, obviously, with any of these revolutionary developments, it can be a double-edged sword in that AI can be subject to the potential misuse. And so certainly at Onfido, we work very hard and strive to ensure that these technologies operate fairly for all individuals, to make sure that we're being as inclusive as possible in terms of bringing people into the ecosystem. But to answer your question directly in terms of why AI and machine learning is making the impossible possible, the most important thing is that the data now exists in spades, right? And with digital now coming into the forefront, the data exists in a lot of different ways. It's unstructured, it's unformatted, but the main point is that the fuel for these technologies now exists, and more importantly, can be applied to identity. So certainly when we look at the future of biometrics in online identity verification, it involves both artificial intelligence and machine learning. And obviously there's key benefits for banks building this into their processes, right? For one, it eliminates the human aspect of things. So it eliminates human error. It expedites certain processes. And over time, as more data and the quality of data is good is fed into the machines come smarter. So in our view, banks could do well to consider partnering with companies whose sole focus is around security, because this is something that, while is important to banks, they have other things that they think about on a day-to-day basis to run their business, whether it's making loans, taking deposits, and so forth.
Yeah, I think those are really important points. And another area that I want to get your take on is facial recognition and the consumer mindset, and how banks can position tools like biometrics in such a way that their customers are comfortable with them and trust them for the process, and don't get sort of a scary big brother reaction.
For sure. And it's always a balance. And I think fortunately for banks, what we've seen is that consumers do expect a certain level of friction, particularly in high value situations, because it makes them feel more secure. I saw some research the other day that consumers are becoming more comfortable with multi-factor authentication. At the same time, right, banks know that they need a process that provides effective security to engender trust, but not introducing any more friction than necessary, so that they can provide sort of the best of both worlds to consumers. And we've seen from the research that banks are very enthusiastic as it relates to biometric identity verification methods. The survey research showed that greater than half of the professionals saw facial biometrics with a photo as an effective method for identity verification. But it's not just enthusiasm that is pushing banks to make these changes. Banks are also facing regulatory pressure to move away from usernames and passwords from the OCC and other regulatory bodies. But certainly in the US, I think it's going to still be a gradual change. Particularly if you compare it relatively to what's happening in China and Japan and other parts of Africa where usernames and passwords are less prevalent. So you alluded to the fact that consumers still may be a little leery of how things are trending. And so while some still worry about universal consumer acceptance, I think the attitude is changing as more and more people become used to doing facial recognition via their smartphones or other devices. We can point back to the days of online banking when that came out years ago, and I think consumers were pretty unconvinced at the time, and now a lot of people look at online banking as sort of table stakes for establishing a relationship with a financial institution.
Yeah, that's certainly the case for everybody that I know, Geoff, in terms of the online banking trend. And actually, this ties in really well to a critical topic that we know is on the mind of every bank professional, and that's the customer experience. So you mentioned that a little bit in here related to the friction versus frictionless. How do banks continue to balance the need for security and fraud prevention while creating a more seamless, frictionless customer experience? I'd love to hear your thoughts on that.
Sure. It's a great question. I think balancing these priorities can be really tricky. When we point back to the survey research, we saw that in addition to money being allocated to improve automation and enhance digital services, we also saw that greater than half of those surveys were prioritizing investments in fraud prevention and mitigation strategies. And by definition, those strategies introduce some level of friction. And I think the last thing that you want to do is, if you think about it, 95% of your traffic is probably good. And you don't want to put in solutions that stop the 5% and hurt the 95%. So I think in either case, though, it's a real challenge for banks to deliver on both expectations. I think it's a continuous education effort that banks need to put in place to ensure that their customers understand that balance. I think tapping into the data and the insights that are available will help banks set the proper course and more quickly course correct. But certainly in an era of social media, I think trust and reputation and loss of customers can happen in the blink of an eye, right? In the past, I think consumers had less choices around where to get financial services. So even if they had a bad experience, the level of attrition was not very high for banks because there was nowhere to go. And today, I think you're seeing consumers, vote with their feet and walk out the door if they see that they can get a relationship with a bank that's going to provide them a better customer experience. So I think that's very critical for banks to try to get that balance right. It's not an easy answer, but I think in terms of making sure that they're getting the most out of their technology and continuing to educate their customers on that balance would serve them well. So I think that's the best way that we see for banks kind of to handle that situation in terms of balancing the priorities of operational efficiency, customer growth, and fraud.
Thank you so much. Those are fantastic insights. So we're coming to the end of our podcast. And before we wrap up, I just wanted to have you sort of close out with, kind of how you see all these things tying together and what you guys are thinking about, going forward and what banks should be thinking about going forward.
Sure. I mean, I think to emphasize some of the points that I alluded to earlier, we think the banks that are going to not only survive, but thrive will be those that put in place a data-led approach to deal with the increasing threat vectors caused by the digital transformation. A single approach is really not enough to stay ahead of the game. I think the battle for customer acquisition, as we alluded to before, is more intense than ever. Banks need confidence that they're not only onboarding customers, but retaining those customers and driving lifetime profitability with those customers. So I think that's really the key, is that the industry is moving more towards an approach that is data-led and multiple signals versus having sort of a single solution, if you will, to solve digital identity verification.
Well, unfortunately, that's all of the time we have for now. I want to thank you so much for sharing your knowledge with us today. I learned a lot, and I know our listeners will too. To those of you who'd like to learn more about the topics we've covered today, I would encourage you to visit Onfido's website. Geoff, thank you again so much for your time. I really appreciate all that you've shared with us.
It was great to be here today with you, Jennifer. And I hope the audience learned something today as well in terms of where the market is today and where we think it's heading and how you can be successful in the future.
Thanks again. And everyone listening, stay well and be safe. Take care.